Okay, so welcome everyone to our lecture one of this AFM series. Students, this is a very special batch that I have created, whereby the entire depth and breadth of AFM we will be covering full course, and that too in just 210 hours. We used to be teachers who have predominantly been in the face-to-face market. I have been teaching this subject face-to-face for more than 15 years now. This is my 16th year, and I, for me, we have been doing these online batches also, where students are sitting at the comfort of their homes and they are attending lectures. Just in case you know, I finished our my first batch of AFM only online, which started on 5th of January and ended somewhere mid of March this year, 2026. We had a very thunderous response for it, and due to that, we decided that we should go for another batch, and this time all English, especially for those who are comfortable with learning only in the English language. So here we are. So without wasting any time, what I will do is, for the next few minutes, I will just give you an introduction of exactly what AFM subject is all about. Okay, this entire subject, what does it say? We will first of all talk about that. Now, many of you might be thinking about the connection of inter CA financial management with final CA advanced financial management. Students, inter CA FM was one of the most beautifully designed syllabuses of ICEI that gave you tremendous clarity. Okay, that gave you tremendous clarity as to um, various basics of financial management. So, things like EPS, MPS, P ratio, ROE, growth rate, retention ratio, dividend payout ratio, a lot of stuff, leverages, capital budgeting, NPV, time value of money, IRR, so dividend decisions, cost of capital, WACC, KD, KP, KR, okay, what is capital structure. All of these things, small things in detail were discussed in inter CA FM, correct? But now when it comes to final CA AFM, okay, before that, in inter CA, as you people remember, there were three major decisions that you had to take. Anyone remembers which three decisions you had to take in inter CA FM? You can tell me on chat box. Which were the three decisions you used to take in inter CA FM? Everyone, please participate on the chat box, please. Yeah, so the three decisions were like this, correct? Financing, investing, and dividend. All of you are saying the right things. In a sense, the technical terms were financing decisions, investing decisions, and dividend decision. Financing decision was all about what? From where to raise money. Investing decision was all about what? Where to invest money. And dividend decision was all about what? That if there is a profit in the company, how much of that profit is to be shared with the investors and how much is to be basically kept and retained in the company. So, students, as far as financing decision is concerned, the three chapters that dealt with it were capital structure, then there was cost of capital, and there was one very boring chapter called as capital structure theories. You remember this? NI approach, NOI approach, MM theory, etc. Investment decision, students, was the beautiful capital budgeting and NPV, everything, IRR, etc. That whole chapter. And again, for dividend decision, we had another chapter called as dividend decision. So these were the decision makings we were learning in FM of inter CA. But when it comes to final CA FM, students, our whole syllabus is huge. It is humongous. But at the same time, I will tell you that it is broadly divided into two parts. One is called as valuation and one is called as risk management. I'll again repeat, one is called as valuation and one is called as risk management. Now students, anyone in the class can tell me what is the meaning of valuation. Whatever you think in your heart, you tell me. What do you mean by valuation? Anyone wants to tell me what do you mean by valuation? Okay, so the equivalent of company in monetary terms, okay, deriving at the benefit that can be drawn from an instrument or an asset. Okay, thank you. Very good. So students, valuation broadly means this, that if you are thinking about purchasing anything, or maybe let's say you're thinking about purchasing a share. Now that share, from where will you purchase? Can I say you'll purchase it from the market? Now in the market, the price at which the share is trading, that price is called as price. Okay, there is no other word for it. So let's say there is Larsen and Toubro share, LNT. LNT share is trading at let's say rupees 1,500. So students, this 1,500 rupees LNT share, this number 1,500 is the price of the share. Everyone clear? However, if somebody asks you, do you want to buy this share? Then the next question you want to ask is, okay, this is 1,500 is the price, but what is the value? Students, value means, sir, how much am I ready to maximum pay for this share? Okay, what is it that I am ready to max pay for the share? That number, students, is called as value. Did you understand? Give me a yes please on chat box. In fact, now for everyone's comfort, when I will ask you to say yes, just type Y on the chat box, nothing else. Don't give thumbs up, nothing. Just type Y and send, so that it is easy for you also and it will easy for me also to understand that you are paying attention. Okay, it's a good win-win situation I learned from the last batch. Okay, I was asking them to type yes, they were feeling very lazy, but Y means immediately they used to type. So you also do that. So as far as value is concerned, so value is what I should be ready to maximum pay for that particular instrument. Now students, why do you want to know how much you want to maximum pay? Sir, once I know how much I am ready to max pay, only then I can decide whether I am okay with the price or not. So for example, you are saying I am ready to maximum pay 1,300 for LNT share. So 1,300 becomes the value as per you. Everyone clear? However, the price is right now trading at what? The price is right now at 1,500. So if the price is 1,500, I am ready to maximum pay only 1,300. Can I say the price is more than the value? Do you all agree that this share will be considered as overpriced and will be rejected? Give me a Y. You understood this? This is an overpriced share and will be rejected. However, if the value, do you realize, is more than the price, let's say value is 1,700. Everyone clear? If the value is 1,700 and the price is only 1,500, can I say you will definitely buy because the share is underpriced? Like that. Now, I hope you people are able to understand that the price of the share, 1,500, that is not in your or my hand. That is, can I say, demand and supply forces of the market. Correct? But valuation, how much I am ready to pay, can I say that is in our hand? So a major chunk of AFM Okay, a major chunk of AFM deals with how to do valuation. Now, whose valuation are we supposed to do in this chapter? We are supposed to do the valuation of shares. We are supposed to do valuation of bonds. We are supposed to do valuation of securities. In fact, we will be doing valuation of companies only, full. So why would one do valuation of companies? Students, because there is a concept called as mergers and acquisitions. Everyone clear? So there is an acquiring company and there is a small target company. So if the acquiring company is purchasing the target company, do you people realize the acquiring company will have to pay purchase consideration to the target company shareholders? Now, purchase consideration accounting you have already studied in accounts. But here in FM, we are going to learn how was the purchase consideration decided. Because students, there is a company in front of you. You need some calculation no, to decide that, okay, for this company, I am willing to pay this much. But that valuation, students, we will have to learn here. So valuation goes into various areas. Everyone clear? It goes into bonds, it goes into equity, it goes into valuing entire businesses. This entire stuff, students, half of the chapter, half of our syllabus is basically broadly divided into this and things surrounding this. Okay, a lot of surrounding aspects around valuation. We will be discussing that as and when we go there. So in introduction, I will not tell you everything. I'll just giving a broad understanding of what the subject is all about. Okay, the second half. Students, the second half of this subject of AFM deals with the concept of risk management. Okay, so students, what is risk management? So first of all, to understand what is risk management, no, you will have to first of all understand what is risk. Okay, risk means what? Now, students, in finance, we define risk as uncertainty caused by future. I'll again repeat, risk is defined as uncertainty caused by future. Give me a yes. Did it register in your head? Risk is referred and defined as uncertainty caused by future. So, for example, I have purchased a share today. So, can I say I will be wanting to sell the share maybe in 2 months, 3 months, etc. Do I know from now only at what price I will be able to sell the share after 3 months? The answer is no. Oh, you don't know at what price you will be able to sell? That, students, is called as uncertainty caused by future, which causes risk. Give me a why. You understood the example? Simple example. Uncertainty caused by future is called as risk. Okay. If you want one more, I'll put it like this. Do you people remember inter-CA capital budgeting investment decision chapter? NPV, you remember NPV? Now, in NPV, what we used to do, you remember, no? We used to make these tables of year, cash flow, discounting factor, present value. This table, you remember? And in that, we used to write here year 0, 1, 2, 3, 4, 5. In 0, can I say there used to be the initial investment and then all the different cash inflows that we were supposed to get, we used to place them here. And then can I say the present values total, we used to call it as NPV. Give me a yes, you all understood this? What I'm trying to say? Okay. Students, I have one question to ask you. Is the screen behind me appearing slightly blurred to you on Zoom? Okay. So give me 1 minute. I'll just sort this. Hold on. Student, is the screen now extremely clear to you? Give me a yes. Okay. So what you should do, no, when I'm talking to you, you can shift to the speaker mode. Can you see there is a meeting mode or something like that upstairs? And then when I am writing or we are doing some sums, etc., you can shift to the screen. Is everyone clear with it? Are you comfortable? Or you can keep the shared screen mode also, no problem. It's on you. I don't know if you have, if you're operating from a mobile phone, then maybe there should be those two screens. You have to just swipe right or left and you should be able to see that, okay? So students, I'll continue now. Everyone, are you comfortable? Give me a Y. Everyone participate. Just students, when you type Y, I feel that you all are paying attention. Huh? And everyone, please type Y on the message to everyone. I hope I'm not demanding too much from you. Just one Y. Okay. Thank you. All right. So students, ready? So what was I saying? Let's go back to the example, capital budgeting example I was giving. You can see the screen now. Here, cash flow, discounting factor, present value. Correct? You had this 0, 1, 2, 3, 4, 5. You had the initial investment, you had CI, 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 CI. Used to do the discounting factors, and then can I say used to get NPV. Students, if NPV was positive, you used to say accept the project. NPV negative, reject the project. Everybody knows this, correct? Students, however, I have a question. Can someone on the chat box tell me that when I am calculating this NPV, I am sitting on at end of which year? I am right now at end of year 0, 1, 2, 3, 4 or 5. Give me on the chat box. When I am calculating NPV, net present value, when I am calculating on paper, which date is this? It is year 0, 1, 2, 3, 4, 5. Very good. It is today. Today means can I say end of year 0? Everyone agreeing? Okay, Sahana, can you please change the message to that group chat, please? Thank you. Otherwise, I'll have to keep shifting the chat box. Can you just change it and write 0 here? Sahana, if you're able to hear me. The JK Shah classes now don't send message there. Send message on message group chat, like where everyone is doing. Yeah, that's it. Thank you. Okay. Hey, everyone ready? Can we start? So as everyone is telling me that this NPV, students, we are calculating, can I say sitting at end of year 0. Now I will put one question in front of you. You have to keep answering, okay? When you are doing NPV, have years 1, 2, 3, 4 and 5 already happened or yet to happen? Give me on chat box. Is it yet to happen? Yeah, it is yet to happen. It has not already happened. Very good. Students, therefore, sitting at year 0, you are doing 1, 2, 3, 4, 5, can I say, futuristic projection. Do you people understand that in that calculation, you are sitting here, but this entire thing is future? Now comes the risk element. Do you people agree that your NPV that you have calculated could completely go for a toss if the future does not behave as per how you expected it to behave? Give me a yes. Are you able to understand? Your entire NPV could go for a toss. You said NPV positive, accept the project, but on the basis of what? You did it on the basis of future cash flows. But future cash flows are not certain, no? They are uncertain. That is the definition of risk. Is everyone clear? Your project is risky. Okay, to keep it short, if you would have invested in the government of India bonds, can I say the future would have been very certain for you? You know it is a risk-free investment. But when you're investing in business projects, what is the guarantee that these cash flows will actually happen? And can I say when we solved it in Inter-CA, we assumed we were God. We assumed that whatever we expect to happen will really happen. Everyone clear till here? But in reality, can I say the what will happen in years? What will happen today evening? What we will be eating? That also we don't know. Correct? What do you think you can expect the business project full of uncertainties to give you exactly what it will give in years 1, 2, 3, 4 and 5? Hardly a chance. And hence, can I say our NPVs are slightly faulty? So students, can I say therefore, this is another example of risk. So everyone has understood the definition of risk, please. Risk is defined as uncertainty caused by future. Everyone clear? Risk is defined as uncertainty caused by future. I'll give you one more small example One of my favorite examples, which is basically the base of one of your biggest chapters of final CA, and that is Forex. You might have heard from your friends that there is one chapter called as Forex, huge chapter of FM, AFM. So, um, now, in short, I'll tell you, but we'll go in detail when we do Forex. But see if you're able to get a glimpse of what it is. You are Indian, okay? You sold goods to Mr. Glenn Maxwell of Australia, okay? You sold goods to Mr. Glenn Maxwell of Australia, and the consignment value is, let's say, 1 lakh Australian dollars. Okay, 1 lakh Australian dollars. Students, AUD, have you heard? Australian dollars. Give me a Y. This is Australia's currency. Okay. So I sold goods to Mr. Glenn Maxwell of Australia worth AUD, Australian dollar, 1 lakh. And we gave Glenn Maxwell 3 months credit period. Everyone understood till here? We gave Glenn Maxwell 3 months credit period. Can someone tell me what is the accounting entry we will pass? Don't tell me. I'll tell you. You tell me. Yes. Can I say simple? Glenn Maxwell to sales or a debtor account debit to sales. Give me a Y. Simple answer. Everyone clear? Okay. After 3 months, when Glenn Maxwell gives us money, can I say the entry will pass is cash account debit to debtors? Everyone clear? Or cash bank account debit to Glenn Maxwell. Give me a Y. This much you understood? Can someone on chat box tell me where is the risk in these two entries? There is some risk there which is there in this entire example. Oh wow, very good. Khushi, Arshini, very good. Kya baat hai? Very nice. You all understood. Anyone else understood this? Take your time, think about it. Divya, yes, very good. Shweta, yes, correct. So what happened is, today when I sold goods to Glenn Maxwell, no, let's say 1 Australian dollar is equal to rupees 30, for example, okay? 1 Australian dollar is equal to rupees 30. Students, AS11 calls this rate as the spot rate. Everyone knows this? Spot rate. So based on spot rate, do you people realize that the 1 lakh dollars worth of goods you have sold to Glenn Maxwell, or 1 lakh Australian dollars, do you realize in our books of accounts it will be recorded at rupees 30 lakh? Give me a yes if you understood this. Debtor account debit to sales, I will record it in rupees, no? Indian rupees, rupees 30 lakhs. However, when Glenn Maxwell actually will give me 1 lakh Australian dollars, see, I am not afraid about Glenn Maxwell running away. I know he will give me. His wife is from here only. But I just want to know, I want to ask you, there is no uncertainty about he running away. The uncertainty is about something else. The uncertainty is, yes, he will give me 1 lakh Australian dollars. But it will convert to how many rupees? Can I say that uncertainty is there? No, for an entire 3 months, I will not be able to sleep peacefully because 30, that rate might not remain true for the entire period of 3 months. Give me a yes if you understood this. Huh? So on due date, can I say if the rate drops below 30, can I say our entry will be cash bank account debit, but that will be around, let's say it drops to 28. Do you realize he will give us 1 lakh Australian dollars, but what we will get in hand is only 28 lakh rupees. So cash bank account debit 28 lakh rupees. Loss, can I say debit 2 lakh rupees. To Glenn Maxwell 30 lakhs. Everyone understood? Forex loss, correct? And similarly, there could be gain also. So students, this loss gain, are you sure about it from the day you sold goods to Glenn Maxwell? The answer is no. That is uncertainty. Everyone clear? That creates uncertainty for you. Another example of what is risk. So students, I'll now conclude this. What is the definition of risk? Definition of risk is defined as uncertainty caused by future. Everybody clear? Risk is defined as uncertainty caused by future. And what therefore must we be doing in our syllabus of AFM? Risk management means what? Students, risk management means, oh, I have uncertainty in my life. I want to eliminate this uncertainty. What do you mean by eliminating uncertainty? Can I say I want to create certainty? Is everybody clear? Creating certainty means, sir, today only I want to know at what price I will be able to sell the share. Sir, today only I want to know after 3 months when Glenn Maxwell gives me 1 lakh Australian dollars, it will convert to how many rupees? Sir, tell me now only. That creation of certainty in our life, elimination of uncertainty from our life, students, is called as risk management. Give me a why. Did you understand this? This is one half of our syllabus, risk management. And you might have heard risk management is actually called by another one word. Anyone knows what is that one word we use for risk management in finance? GK, general knowledge. Brilliant. Rajoshi, Divya, correct. It is called as hedging. Piyush, very good. Hey, everyone has heard this term. Give me a why. Hedging. So hedging is basically nothing but the same thing, risk management. Okay. All right. So students, with that intro, I will now start today's chapter, that is mutual funds. There is a lot more I want to discuss with you as to what AFM, how to attempt, how to study, blah, blah, blah. There are 1,000 things I have to share, but I will amortize all of that during the entire 210 hours. Okay, I don't want to do everything at one shot. We will go slowly. I'll tell you all those extra stuff things. Whenever I feel now that students are getting bored studying, I will immediately, tell you some stuff about how to attempt and all of those things. Okay, so right now we'll straight away start. Sana, the PDF is already put on the Telegram group. Which Telegram group are you on? Others, please confirm it is there. Okay, you do one thing. If you all, I think you all are not on the main Telegram group then. Okay, do one thing. For time being, go to Telegram and search my name, please. Search my name. Did you find one group called as CA Rahul Danait Official? Did you get that? In that, just check. In that, just check the second last message. You will find the PDF. Got it, no? Okay, very good. All right. Arshita, very good. Thank you. All right. So students, can we go ahead, please? All right. So in your notebook, students, what we can do is, everyone is requested to give heading first chapter, a very, very interesting chapter called as mutual funds. Everyone, please. Everyone, please, in your notebooks, give heading of new chapter, mutual funds. Is my audio clarity very good? You are able to hear me very clearly, everyone? Mic is working properly. I hope it is not coming like a normal Zoom output of audio. No? You're clear and sharp, no, everyone? Okay. Thank you so much. All right. So everybody is now requested to please open your notebooks. Okay, so what all we will require for AFM students, I will basically be asking you to maintain 2 sets of notebooks. Actually, it will eventually go to 4, but there is something called as practice plus. Okay, there is something called as practice plus, which I have introduced in this book. These practice plus questions I want you to be solving in another notebook only. Everyone understood? These practice plus questions I want you to be solving in another notebook only. And because of that, I will be asking you to maintain 2 sets of notebooks clearly. One will be the notebook of classwork and one will be a notebook for practice plus. As far as notebook of classwork is concerned, it itself might go into 2 to 3 or maybe 4 notebooks, depending on what is the size of your notebook. And practice plus, students, I think another 1 or 2 books could go, because there are a lot of sums that we have to do. Mostly 1 book would be enough for practice plus. Okay. So that call you can take later. Right now, students, right now, I want you to, only one notebook is enough for today's lecture, don't worry. So Sana, there are these few chapters like mutual funds and advanced capital budgeting, which are sundries and they are not a part of the mainstream valuation or risk management. Everyone clear? Which is why it is very simple also, and I have taken it at the start. Everyone clear? From here only we'll pick up the whole AFM. However, about mutual fund, I want to tell everybody this chapter is small. Small means around 10, 11, 12 hours it should get over. However, this chapter, 100% accuracy, I'm telling you, minimum 8 marks question every paper. Okay? If there is not a single paper in which mutual fund questions have not come. So take it very seriously and fully absorb everything I'm trying to tell you. And please do whatever I ask you to do. Acha, by the way, today we have got some attendance. I want to ask all of you, are you committed to come live every time? See, as far as the recording is concerned, no, the recording will be available to you in 10 minutes after the lecture is over. So by 9:30 lecture over, 9:40 the video will be available for you. So students, just in case you are not well or you have some official commitment, etc., I understand. But because of that one particular day you did not come, do not give up the live altogether. Have that sincerity like how rankers have. That okay, I missed one class in the morning because of office. Evening I will come and I will come what may watch it so that next day I come back on the bandwagon of life. Give me a commitment. Will you do this? In case you miss a particular lecture. Otherwise, you should come for live every day. Anyways, I am not demanding much of your life. Now I am only taking 70 days. 70 days, now in that you will also feel guilty. Or this much also period I couldn't sustain live. That is not right. Try coming live and be consistent. Those who are watching recording, you watch recording consistently. I understand. But those who are coming live, you come live consistently. I'll also feel happy and encouraged to actually, teach if there are people in front of me. Okay. Also, there is one thing I want to just give disclaimer. In middle sometimes, no, whenever concepts are very heavy or difficult or tricky, as a teacher, I have a need that I want to see the student's face when I am explaining, and then only I am able to communicate properly. During those rare few moments, if I ask you to switch on your videos, will you cooperate please? During those moments, and I will try to ensure that those moments are not at 6:30 a.m. because I know your avatar would be little, okay, you would not want to come. But if at all such situations come, please cooperate. It's okay. Doesn't matter who, how, what kind of hair is right now there, etc. Just come, be on screen. I will be very, very comfortable teaching in case you all are there. Then the teaching flow becomes little easier for me also. Otherwise, whenever I don't need, it's okay. Then you can keep your videos off. And chat box, however, I need full dynamic. Okay, you should be constantly on the chat box. Otherwise, you will also sleep and you will make me also sleep. Okay, so don't do that. Okay, so now coming to mutual funds. Students, have you heard about mutual funds? Of course, you have. So many ads you will see. Non-stop they promote mutual funds. In Hindi, they say mutual funds sahi hai. I don't know what they say that in South, but sahi hai means mutual funds is very good. Like that they say. So what exactly is mutual? Mutual fund is subjected to market risk. Please read offer documents carefully before investing. All that you know. So what exactly is a mutual fund, students? Okay, so a mutual fund, to be defined very, very simply, is an intermediary between an investor and an investment. I'll again repeat. Mutual fund is an intermediary, middleman between between an investor and an investment. So an investor wants to invest money, but he or she is not clear exactly where to put, how to put, etc. Can I say a professional fund manager comes between and says, don't worry, you give it to me, give it to us, and we have a full-fledged team, okay, which will take care of all of these various investments. You trust us, we will charge a small fee for that, and you sleep peacefully, we will take care of everything. Is everyone understanding what a mutual fund is? In short, Now, um, if we maybe, just draw one small diagram for this, okay? See, this is a rough book. Okay, please pay attention. So this is a mutual fund balance sheet, okay? Be with me. Now, mutual fund attracts money from investors and invests it in various shares, bonds, assets, etc. Now, first of all, let us discuss this side. Everyone with me? Let us discuss this side. So, imagine that you all are here, okay? You are the investor community, okay? Investor. Students, let's say that RCB mutual fund is coming out with a new fund offer. Okay, what new fund offer? Worth rupees 100 crore. Please be with me. 100 crore rupee new fund offer RCB mutual fund is coming out with. So, just as a company issues shares to attract money of people, mutual funds will also issue shares to attract money of investors. However, a share in a mutual fund is not called as a share because it doesn't have the characteristics of a share. They are called as units. Everyone clear? UNITS. They are called as units. And generally, face value of each unit, students, is equal to rupees 10. So, do you agree that if the mutual fund wants to attract rupees 100 crore from public, they will have to issue 10 crore units at the rate rupees 10. Give me a yes if you understood this. 10 crore units at the rate rupees 10. Is everyone comfortable with this? Because if and students, it is always issued at face value only. Remember, there is no discount premium concept here. Always issued at face value. So 10 crore units at the rate 10 is issued. Now, students, if this would have been a company, no, we would have called this as IPO. Give me a yes. Initial public offering. But this looks like an IPO, but it is not called as an IPO. It is called as NFO. Everyone clear with this? The name is New Fund Offer. Everyone ready? New Fund Offer. So here, students, they have issued 10 crore units at the rate rupees 10 and they have raised 100 crore. Students, what will they do with the 100 crore? Can I say they will buy shares worth rupees 100 crore? Is everyone clear? They will buy equity shares. For example, students, right now I'm assuming this is an equity mutual fund. Oh, sir, there are various types of mutual fund. Yes, there is equity mutual fund, there is debt mutual fund, there is real estate mutual fund, there is hybrid mutual fund, there are gold mutual funds. Everyone clear? There are various such options. I'll give you all that general knowledge slowly as we go into the chapter. Right now, for simplicity, assume it to be a share equity mutual fund. Everyone, give me why. Are you there with me? So, let's say in Reliance Industries, they put 20 crore. In Tata Motors, they put 30 crores. In, let's say, HDFC Bank, okay, HDFC Bank, they put another 10 crore. In, let's say, Asian Paints, they put another 20 crore. How much happened? 20, 30, 50 plus 30, 80. Let's say they put money in maybe Cipla. Okay, let's say they put money in Cipla of 15 crores. So now can I say I think 95 crores is invested? Give me a yes if you are able to calculate. Is this 95? Okay. And let's say they keep 5 crore as cash, liquidity. Everyone understood till here? Like that, the entire 100 crore students is invested. Done? Okay. Now imagine I am mutual fund, okay? And you are this investor who bought this mutual fund. Students, your market value right now of the unit is 10. Right now the MV is 10. Sir, it is FV, no? FV, MV, everything is same at the start. Everyone clear? Nothing different. Face value, book value, market value, everything same. This is not as complicated as equity. It's simple. Everyone clear? Now, students, imagine that one day later, okay? One day later, after one day, you can see these shares. Do you think their prices will remain same? Of course not. Can I say everything will change? So, students, let's say Reliance becomes, the market value of Reliance becomes 21 crore. TCS market value becomes 33 crore. HDFC market value becomes 10.5 crore. Asian Paints market value becomes 22.5 crore. Cipla, let's say, falls to 14 crore and cash remains cash. Is everyone ready till here? Can you tell me what is the total market value of assets, please? Take your calculator and give me total market value of assets. $106. Very good. Okay. Are you convinced that this 106 is not book value of the shares held? Huh? Everyone ready? Book value continues to remain 100 only for you. This is, can I say, the market value of the shares? Everyone clear? Now, students, can I say here, you are there holding 10 crore units at the rate rupees 10. Everyone with me? Now, can I say 10 crore units were representing assets worth 100 crore, but those assets which were worth 100 crore, can I say have now achieved a market value of 106 crore? Everyone with me? Can I therefore tell you that the market value per unit will be market value of assets held by the mutual fund, the whole divided by number of units? Can I say this is now 106 crore divided by 10 crore units? Can I say the market value of your mutual fund unit will now go to rupees 10.6? Give me a yes, please. Did you understand this? Simple calculation. There are a lot of complications yet to come in all of this. Right now, simplified version. Did you understand how 10 became 10.6? So, simple rule number one. Can I say this price at which you entered, can I say that was the face value, that was the market value, everything was same at the start. But as and when students, this started increasing, decreasing, fluctuating, can I say this number also starts taking a hit. That means this number is connected and linked to not the book value of assets, but the market value of assets. And students, that reflects in your 10 going to 10.6. I hope you are smart enough to understand this number could have gone to 9 point something also, depending. It all depends on this. Everyone clear? It all depends on how the market value of the assets held by the mutual fund fluctuates. Everyone clear till here? Very good. Now, students, one next level of complication. Be with me. So, imagine this is a mutual fund. Okay. This mutual fund has issued units. So, you are the investors here. Okay. Can I say the market value of the funds you held is 106 crore and the market value of the assets basically which are the underlying of this is of course 106 crores. Now let's say the mutual fund raises more money through the debt route. Everyone there with me? Through a liability route. So if the mutual fund, from equities, from your shares perspective, this is equity and this is debt. Everyone clear? And these are assets, normal. So let's say the company, the mutual fund raises a 20 crore debt and that translates to cash here of 20 crore. Everyone with me? Can I say that 20 crore cash, of course, will be a part of your overall assets? And let's say the mutual fund out of 20 crore uses 18 crore to buy more shares and 2 crores it keeps as cash. Students, whatever the mutual fund does, I don't care. Can I say the market value right now has become 126 crore? Give me a yes, please. Because end of the day, can I say that entire 20 will go into the assets? Balance sheet tallied. Okay. Students, what was the formula I gave you for market value per unit? I told you it is market value of assets held by mutual fund, the whole upon number of units. So now the market value, can I say, is 126 crore, the whole divided by how many units? 10 crore units. Can I say the market value per unit has now gone to 12.6 rupees? Give me a yes. Did you understand this? Anyone in the class can tell me, sir, I'm not feeling that this is right, sir. My NAV, which was 10 rupees earlier, suddenly has skyrocketed to 12.6. My God, sir, something is wrong. No, is really the market value of my unit growing so fast from 10 to 12.6? Because sir, I did not invest so much, no. Students, I hope you people are able to understand that this calculation is wrong. You know why it is wrong? Yes, it is wrong because, students, you are holding units whose market value actually is not 126 crore. Yes, can I say it is only 106 crore? Is everyone paying attention? Which means out of this 126, 20 does not belong to you, Baba. Everyone give me a why. You understood this? 20 does not belong to you. It belongs to some outsiders who gave loan or debt to the company. So the formula slightly changes to MV of assets held by fund minus, this is the official formula, external liabilities. Is everyone paying attention? Minus 20. And do you realize this again goes back to original 10.6? Give me a yes. You understood the market value of unit, new formula now. MV of assets held by the fund minus the external liabilities. The word external is used because this is not to be considered as liability. I hope you are able to only this external liability that we will subtract and we will divide by number of units. Everyone, 10.6 clear? Now that you have understood the final formula, be with me. Now that you have understood the final formula, I can now confidently tell you that market value of each unit, I'll again repeat, market value of each unit is called as net assets value, NAV. Have you heard this term ever? In a mutual fund setup, this is called as NAV. Give me a why. Everyone understood? So when from now onwards, whenever I use the term NAV, what you should understand, I am talking about market price of a unit. Give me yes. MPU. How we have market price of share, no? MPS. Like that I'm talking about MPU. MPU, market price per unit. But that market price per unit, students, I hope you realize, is not changing because of demand supply function. It is changing because there is demand supply function in the assets that the mutual fund is holding. Because this fluctuates, therefore the NAV of the fund fluctuates. Give me a yes. Give me a why. Everyone understood this? Demand supply, high demand, share went up, high demand, share went down. All that will happen here, students. Correct? And its effect will come on your NAV. Correct? So let's see how many of you are smart. If you are a mutual fund investor, okay? If you are a mutual fund investor, you will earn money only if NAV appreciates. Give me why. Correct? You will earn money only if NAV appreciates. Basic. Okay? If you all have understood this, then I think you have learned enough finance to understand the next calculation. Return as a percentage for a mutual fund investor will be I'm waiting for you to tell me yes if you understood this. Take your time. So, students, like for example, if I tell you, you invested in the mutual fund when the NAV was, let's say, 10. Let's start now. You invested at the start only. In 1 year, the NAV became, as we saw, the NAV became 10. Let's say in one year, the NAV, let's say, became 11. Simple example. In 1 year, the NAV became 11. Do you people realize the return that you earned from the mutual fund will be NAV at the end of the year minus NAV at the beginning of the year, the whole upon NAV at the beginning of the year into 100, and that is equal to 10%. Simple calculation, clear? Formula, structure, everything clear? Now around 7-8 sums we have to do only on this formula. Interesting questions. Everyone clear till here, no? Okay. Now students, last complication before we write the notes and start doing sums. Last complication. Okay. Be with me, everyone. So, there were investors here. Okay. They are holding the units, correct? There is liability here. They have given some cash. Everything accumulates into the assets here. Everything you understand. Now, students, in assets, what is there? Shares are there, no? Reliance, TCA, Tata Motors, Asian Paints, etc. There are shares here. Now, what the mutual fund does is, be with me, they have purchased shares of these companies. Can I say someday or the other, these companies will issue dividends? Give me why. Did you understand this? Someday or the other, these companies will issue dividends. What will the mutual fund do, students? The dividends it receives from these mutual funds, it passes on to the investors. Everyone understood till here? Mutual fund, no, it from one side it takes the dividend, other hand, can I say, it gives to the investors. Do you people therefore agree that as an investor, your return is now not only limited to this capital gain in NAV, can I say simultaneously you can also earn more if the mutual fund hands over dividends to you? Give me a why please on chat box. Everyone understood? Now this dividend thing, no, there are certain complications. Sometimes it will give, might not give, etc. Those complications will come one after another later on. Right now, imagine whatever dividends are coming, mutual fund is sharing. Is everyone with me? That, students, in that case, can I say return, okay, for a mutual fund investor will be return of year 1. Students, in finance, we call it as K1 also, or we can call it as R1 also. Both terms are okay, no problem. Okay, let's see if you understand the formula. Give me a yes. Areva, very good. Understood, no? So it is basically 11 minus 10, and let's say I'm getting some 0.5 rupees dividend extra. That also will add upon students, upon 10 into 100, and whatever is the percentage. Everyone clear? Like that, students, what will be the formula to calculate return of year 2? Year 2, students, will be like this. Give me a yes. So from 11, let's say it jumps to 15. So can I say it will be 15 minus 11. 11 was na last year's end. So 15 minus 11 plus let's say 2 rupees dividend, the whole upon 11 into 100. And that, student, should give you the return for year 2 and so on. Everybody comfortable till here? Okay. So what have we learned till here? I have taught you 2 formulas. Formula number 1. Okay. Formula number 1, can I say, is from mutual fund point of view. How they calculate NAV. Okay, they will calculate NAV by doing like this. Market value of assets held minus external liabilities, Don't worry, I'll give you notes and all in some time. You just be with me first. Market value of assets minus external liabilities, the whole upon number of units. Everybody comfortable till here? The whole upon number of units. And one another formula is investor point of view. Investor point of view, return of a particular year is NAV that mutual fund calculates at the end of the year minus NAV at the beginning of the year plus dividend, the whole upon NAV 0 into 100. If you understood both formulas, type a 2 on chat box and give me for a change. Okay, very good. You're doing very good. Thank you so much. Now, one general knowledge, or sometimes it comes in, they can ask you questions on in exam also. Okay, can someone tell me who is the governing authority of mutual funds? Who governs this entire industry? Who is the authority? Yes. No, not RBI. It is SEBI. Okay, SEBI is the governing authority. AMFI students is Association of Mutual Funds of India. They are basically a group of mutual funds. The mutual funds, like how they have these cartels, group consortiums. Basically, they are coming together and forming one body that is called as AMFI. But the governing authority above all of them, that is SEBI. Everyone clear? If the mutual fund is a mutual fund that is connected with investments in money market instruments, which we will discuss later, only such mutual fund is governed by RBI. Otherwise, students, it's normally capital market, no? Where basically shares, bonds, etc. Then SEBI is the one who governs everything. Everyone give me a why, understood till here? Now, SEBI has put one interesting rule, and I want you to pay attention. Everyone with me? Okay. What did I tell you some time back? That if the mutual fund receives any kind of dividends, okay, can I say they will have to then pass it on to the investors? Is everyone there with me? Dividends comes in, they will pass it on to the investors. Now, according to SEBI, the term dividends, okay, the term dividends have two meanings. Be with me, interesting. They have two meanings, 1 and 2. Dividend stands for, so dividend means dividend, no, that is one meaning. The equity dividend that the mutual fund will receive from shares like Reliance, Tata Motors, etc. Wherever they have invested, from there, whatever dividends they will get, can I say that is dividend? That everyone understands, no? What is dividends? Apart from that, there is one more, which is termed as dividend here. And you know what that is? Interesting. Realized capital gains. Okay, I am keeping this in front of you. Use your brain and tell me what is SEBI trying to say. I'll explain in a minute. You think SEBI is saying that mutual fund, whatever dividend you earn, no, you pass it on to the investors. But in dividends, no, we consider two things as dividends. One is the equity dividend you will receive from the share, and second is realized capital gains. Both of them will be considered as dividends. Can someone tell me what is SEBI trying to say? Yes, very good. Very brilliant. Rajarushi, Sahana, Divya, very good. Students, you know what is happening here? Samira, correct. Very good. They are saying that, see, when the mutual fund purchased all of these shares, no, students, can I say mutual fund has full right to any time do rebalancing of the portfolio? Rebalancing means, let's say they feel that Tata Motors has it has swelled up too much, it has become too swollen. Let us sell this off and purchase maybe TCS, which is right now underpriced. They have full right to do it. So when they sell off a particular company's share, do you realize they get the selling price which converts to cash, and from that, can I say, they again purchase new shares, etc., blah, 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 all that happens. However, The capital gain part in that sale of shares, I hope everybody is paying attention, that capital gain part, students, is considered as realized profit, which is to be added onto the another realized profit called as dividend. So dividend and capital gain, realized capital gain, that entire cash, students, forms a pool from which, can I say, the mutual fund has to distribute it to the investors. Give me yes if you understood. All clear? And why is SEBI saying very specifically realized capital gain? Students, if the share is not sold, no, if the mutual fund continues to hold the share, then the unrealized capital gain cannot be given as dividends. No, it is still there in the shares. Of course, logic, common sense. Only that which is realized after sale of share, only that, can I say, along with the realized dividends, can be given out to the investors. Everyone clear till here? However, students, let's say that equity dividends received, okay, equity dividends received are, for example, 4 crores, okay, equity dividend received are 4 crores, realized capital gains are, let's say, 11 crores. So the total payout, can I say, will be 15 crore. Is everyone comfortable till here? Total payout to the investors will be 15 crore. Students, 15 crore divided by 10 crore. If there were 10 crore units, no? Give me confirmation. 10 crore were there or 1 crore was there? 10, na? Okay. So 15 crore divided by 10 crore, can I say per unit, the payout will be rupees 1.5. Now I want you to know, from accounting perspective, from taxation perspective, from mutual fund, legal, AFM, all academic perspective, this number is referred to henceforth as DPU. Any idea what DPU is? Dividend per unit. Now, students, never, ever, ever do bifurcation of dividend per unit into the 0.4 and 0.11 and all of those things. I don't know if you divide this, something is connected to the dividends and something is connected to the capital gain. All of those things you are not supposed to do. Give me a yes. That is, can I say, happening in the inner circles of the mutual fund management. They will club 4 and 11 into one body. No discrimination. One body, and it is given out as dividend. It is not given out as capital gain distribution. Like, that term is not there. There is only one term used called as dividend. So tomorrow, if you're getting dividends from mutual funds, you will not be knowing whether that dividend is actually from dividends from shares, or is it from realized capital gain, or is it a mixture? What is the bifurcation? To hell with all of that. We are getting dividends. Enjoy it. Give me a yes. Did you understand that? Huh? So that is the reason why in our formula, no, we will have only D1 here. We will not be having plus capital gain and all, because, students, this D1 is inclusive of everything. Everyone clear? No, it is including everything. This is the D1 from investors' point of view. This is the D1, students, 1.5. Includes everything. Don't need to further bifurcate. Okay? Chalo. So with that, students, we complete the discussion to our intro. Okay? Now I have written some notes for introduction. Let's read it together. Okay? Everyone with me. I will give this to you in writing. Huh? I will write this down in some time. Mutual funds are intermediaries between investors and investment, offering professional expertise in fund management. If you understood point 1, type 1. Okay. Read type 2 on your own and read point 2 on your own and type 2. Okay. Type 3. Very good. Type 4. Okay. Now, what I over the years, no, students kept asking me certain questions. Sir, tell me no about that. Tell me no about which had nothing to do with syllabus. So I have just written down some general knowledge points. Students, these points, no, you need not write in your notebook. I have written it here in the PDF just for our sake. As and when chapter goes ahead, no, when you are feeling bored little bit, one or two general knowledge points we will keep covering. Everyone understood what is mutual fund infrastructure, what are mutual fund asset types, what are mutual fund schemes, what is direct plan versus regular plan, so what is SIP versus lump sum, what is entry load, exit load, what is expense ratio. Sir, we have seen something called as IDCW versus growth plans. How does NAV practically function? So what is open-ended fund, closed-ended, what is active fund, all of these things, no? GK, I will tell you slowly as and when the chapter progresses. But I don't want to sabotage the whole timing of lectures by going into all of this. I am very closely associated with the mutual fund industry. You will understand why in some time. I will tell you all of my. I generally don't give introduction of myself, but whenever I get opportunity, I will tell you. So because of that, I know all of these things in great detail. So I will share with you whenever time permits. Okay. So you have to write now, students, write these first 4 points only. Can we start writing, please? Introduction. Let me know once the writing is done. You have to, okay. Once you are done, no, you have to write D. Done. Okay. Okay. Write till point 4 only. Okay. Done. Okay. If anyone wants me to wait, you should type W. I'll understand. Okay. Those who type W then have a moral responsibility to type D once done. Okay. Okay. Chalo. So now, as you see in our textbook, there is I have bifurcated the whole chapter into modules. Students, module means concepts. Okay. Every module is a new concept. So today, students, we are going to be discussing about module 1. So in our notebooks also we will be doing the same. Now I don't know if you have heard my announcement video of this batch. What I have done, I will tell you now only. Students, entire ICAI universe, all questions I accumulated. I then bifurcated those questions chapter wise. Now, when I'm saying universe, I'm talking of past papers. I am telling you past papers of at least 20 years. Okay. Past papers, RTPs, MTPs, study module. Accumulated them, bifurcated them chapter wise. After bifurcating them chapter wise, I bifurcated them module wise. Everyone clear? Concept wise. That much. See, those outside people who just make compilations will never be able to do that, because you need to be a teacher to be able to do that. So conceptually, which all questions are connected to this concept, I bifurcated it. In that, if I found some sums to be extremely repetitive, which I found, I deleted those. Everyone clear? And then those unique question set I created, which I further bifurcated into two parts: classwork practice and practice plus. Is everyone clear? So what you have to do is, be with me everyone. What you have to do is, once we complete module 1, okay, once we complete module 1 in the class, then your homework is clear. You don't have to go searching, asking for homework. Your homework is clear to you. What you will do as homework, practice plus is the homework section. So now the homework section is not a random homework section. It is connected to what I have taught you in the class. The solutions are given there only. Can you see? Your practice plus solutions are given there only. Is everyone with me? There only. So, and you will be able to easily solve this. So you don't need to go running for PDF here and there, nothing. It's all there here only. Till here clear? Now, secondly, I will be in 2 to 3 days from now, once the batch settles and all, whoever has to comes, everything happens properly. After that, on the official Telegram group of this batch, if you have not yet if you have not yet entered the Telegram group, immediately contact the numbers. They will help you with it. Once that happens, I will put my personal WhatsApp number on that group. Okay. And there will be a format in which you have to send me some document as to basically your fee receipt. And I'll tell you what all I need from you. Once you send that to me, I will be putting you into a WhatsApp group. Everyone clear? Where all of us can freely chat. There will be no restriction on only I will be able to message. No, it's not like a Telegram. It is a WhatsApp where you can chat your normal, anything you need in final CA here and there. You want to ask your friends, you can do social networking. No, I have no problem there. It will be a WhatsApp group, because I will be adding only those whom I am approving. Anyone cannot enter. So only once I see your documents, only then I will be able to allow you in that WhatsApp group. Everyone clear till here? Documents means I'm not going to be asking you your school leaving certificate and Aadhaar card and all that. Documents means basically just your fee receipt. Everyone clear? Once that is done, then students, I will be wanting you all collectively to be, I will tell you now, okay, now next 2 days, everyone should complete practice plus of module 1. I will be announcing there. So students, once you complete, you should be telling me, sir, this question, we are facing difficulty. Then once those questions are finalized and a group of you, all of you have said, yes sir, these are the questions which we are facing difficulty. And it is okay if a particular student is facing difficulty in only one, in a question where others are comfortable. That is okay. You can tell me, sir, I am facing problem in this also. So once all of your problematic questions are assimilated, no, those questions, students, we will do another live session, but that live session will happen night 9 p.m. Everyone clear? Not every day. Whenever we are, whenever those questions are assimilated, I will call you, come 9 p.m. And in that 9 p.m. to 10 p.m., no, I will explain to you whatever those question problems you're having, and we will lock it there only. Recording of that will also be available on your dashboard. Don't worry about it. So in case you're not able to join, you can watch the recording later. But I'll be happy if at least one student is there. Otherwise, whom should I teach? No, that problem will happen. So if you are, that is why I kept it at 9 p.m. because everyone can come home and be comfortable, and then you can attend. Okay, so by doing like that, I think we will be very, very safe. Now, one thing I want to tell you, this book has been updated till January 2026 paper. Jan 2026 MTP, Jan 26 paper onwards is pending. This book went into printing just before Jan. Okay, now MTP, RTP, everything till Jan 26 is updated. So once our batch is over, no, then whatever extra questions that ICEI has asked from Jan 26 papers onwards, for that students, you will have to keep coming. I will of course keep telling you once a week, once in 2 weeks, I'll keep announcing, come for this time to this time, live exam, live lecture we are having. I want to share with you new questions asked. All that also we will do. I'll keep you updated, don't worry, till your exam. So you don't need to worry about updations and all. Now last, I've got a lot of features I want to tell you, but one more I will tell you. Students, I have created quizzes. You know what is a quiz, no? MCQ. So, I have created quizzes module wise also. Okay, it's all ready with me. Once module 1 is over, on your dashboard, the quiz will come. Okay, that quiz, students, if you solve, your entire revision of module 1 automatically happens. You don't need to do anything else. You have to just keep solving. And of course, you have to sit with a pen and paper to try solving the questions, and you have to click there. It's a proper tech. So this entire system that JKSC has developed, here you are not only going to get videos, you'll also be getting those quiz options, and I am using it fully. So module 1, therefore, so much we are doing. We are doing classwork. I'm asking you to do practice plus. I will help you with practice plus questions if any you need, and then you have to solve the quiz. Once this is done, students, you are coming to me to study. No, I am not expecting anything below 90 in AFM. I hope your goal is clear. I will make you, I did that in the previous batch. I will make you also do it. Is everyone clear? It is. You might, I don't know whether you know about it or not, but my batches of AFM, they started in January, this 2026, but already across India, rankers ranging from AIR 1 to AIR 10, they have all joined, inter-CA rankers. And because they know what kind of results I gave, but those results which I gave, you might have seen, I don't know if you've seen my Instagram posts or not, students getting in 90s, 80s, I did not have the space on my creative to put students of 60 plus. Those many students were there in 75 plus, 80 plus. So, and those students, for them, what all I did, 5 times more I'm doing for your batch. So at least 150 marks you should get in AFM now. You're understanding, no? Also, I just want to tell you that from my personal career point of view, 96 was the highest we clocked in AFM, and I'll be happy if you can break that record. Okay. Now, before your exams are still some time away, in between also some students have exams. If they break that record, well and good. You break that then. The student, in May 25, one student got 96, and I was hoping for a gold medal. Gold medal means basically best paper award, highest marks. But the highest marks went to a student, another student who was not my student, who got 97. So congratulations to him. Uh, but I missed a gold medal by 1 mark. So generally, I never developed those desires when I was a student, but now I develop this for all of you. So it's a win-win. If you can get me that gold medal, go for. I'll give you my best, but you also please be consistent and keep coming, and we will do it. Okay. All right. So now we are starting with what module 1 is. Good news, module 1 I have already taught to you. Be with me. So calculation of returns from a mutual fund for an investor. Hey, have you heard of this? Calculation of returns for a mutual fund. Formula clear? Give me a yes. Already done, no? Already taught this. Ha. Now let's see if anyone is able to understand this same formula on total basis. Take your time. So, what is the meaning of total basis? Very, very simple. Come here. So, let's say that you invested in the fund when the NAV was, let's say, 12, and after 1 year, the NAV has, let's say, gone to 15. The number of units you bought were 100. So, can I say your investment value was 1,200? And the value of your investment at the end of the year, can I say is 1,500? Everyone with me? Can I say if I want to, the dividend per unit is 2. Can I say total dividend is 200? Everyone clear? Now, if I want to find your return, I can either do 15 minus 12 plus 2, the whole upon 12 into 100. Give me a yes if you understood this. I hope you're comfortable with the speed. I slightly increased it. Got it, no, everybody? Can I say you can also calculate return like this, na? 1500 minus 1200 plus 200, the whole upon 1200 into 100. This is called as total basis. Are you comfortable with this? The same thing, doesn't matter. Answer will come same only whether you're doing per unit or. Okay? Very good, students. So now that you all have understood till here, I would request everyone to carefully read the entire question 1, A and B both. Read it carefully, please. Once you're done reading, give me a D. Both points together you have to read. A and B, both points together you have to read. Everyone, I'm waiting for your D. Already? Okay. Now I would request everyone to read point A again. Only point A. Be with me. Everyone only read point A. Ready? Okay. Let's see if you are able to understand my first calculation. I'm waiting for you. Give me a Y. I don't think so I need to explain anything here. But still, if you need, I'll help. Okay. Divya, you have said no for what exactly? Okay. Take it. So, students, you want me to repeat? All right. You tell me in Divya, you write like this: understood, not understood. Write like that. What is your situation? Understood. Okay, very good. So everyone, students, has understood what I have done here. Did you see in point number A, the NAV at end of year 1 was 55. NAV at the beginning of the year was 50. Everyone with me? And can I say I am not doing any bifurcation in the dividend, capital gain and dividend and all that? Ignore. Can I say 7? Everyone understood 7? Give me 7 on chat box. Okay. The whole upon 50 into 100. Okay. Very good, student. You're doing very good. I request everyone to read point number B, please. Are we ready? If you all have read point B, you on calculator try something and get me the answer in rough, not in fair. Point number B. Very good. Very good. Take your time. Take your time. Aram se. Very good. Students, check and give me a Y if you understood what I have done. Oh, I think there is a small printing error. I think it is 50 minus 55 plus 5, no? At the end. Okay, I'll correct it. Don't worry. I'll correct it. Students, you all understood? Be very careful while writing. I think that copy paste happened, no? So 5. So can you write this down, please, everyone? Thank you. Question number 1. Where you all are sitting, from there my screen is now on the shared screen. The PPT is seen clearly, no? It is not going out of border, no? Okay. Let me know once done, okay? Harshita, very good. Thank you for answering on YouTube. Thank you. Those who are done are requested to read question number 2. Those who are done are requested to read question number 2. Students, I am removing this slide. Everyone done, no? Okay. Very carefully read question 2. Let me know once read it. Once you are done reading, type Q2 on chat box. Q2 means not Q2, Q and 2, like that. Q2. Done? Okay, let's read this question, please. The following information is extracted from Steady Mutual Funds scheme. Oh, these are all exam questions, huh? Students, be with me. Small 4 mark questions. Can someone tell me what should I call this NAV as? What do we call it as? Very good. It is called as NAV 0. Samira, Sahana, Khushi, Nidhi, correct. Rajarshi, correct. Very good. It is called as NAV 0. This, students, do you people realize is the return, which everyone knows anyways. What is this? Distributions made in the nature of income and capital gain. Oh, this is dividend. Can I say D1 is 0.82? Everyone there with me? D1 is 0.82. Can someone use their brains and tell me what are they asking us to find? What are they asking us to find? Very good. They are asking us to find NAV1. Sir, how to find? Hey, I'll give you a small hint. Generally, NAV1, NAV0 and dividends are given and we find returns, no? Here, return is given, NAV1 is to be found. Give me a why. Did you understand what I'm telling you? Would you like to try in the rough first? Students, you should always keep a rough book in AFM. I'll be asking you a lot of times to do on your own. So either you go to the last page and scribble or somewhere else. Okay? But scribbling will be needed. Okay. So, or maybe some middle page you can tear and do it on that. Because those have to be discarded anyways. Huh? You don't need those. I'll give you fair notes properly. So just for your self-practice. Okay. So I'm waiting for 1 minute. Let me know the answer. Return is given and NAV is to be found out. Okay, that same formula you can use, no? And you can put NAV as the balancing figure there because return you have. Okay, so Rajarshi, your answer has come to 74.83. Okay. Samira, thank you. 74.83. Very good. Two people are getting same answer. Might be right. Might be wrong. Okay, Sana is getting 75.65. Okay. Very good. Might be right, might be wrong. Students, everyone else is trying. No, I'm not getting answers from you. 70, thank you, Piyush. 76.47. 74.83, correct, same answer. 76.47, 74.83. Okay, so it is all ranging in this only. Very good. Students, okay, one news. All of you are wrong. Come on, final CA. One thing you missed. Can I tell it to you? Sana, yes. Okay, I will tell it to you. If you want me to wait, you can type W. Otherwise, I will start. Huh? Sana, close. But not right. Very close. Rajarshi, correct. Okay, so we have got the right answer now. I will explain it to you. Everyone be with me. Students, you know what is that one word you missed? This. Oh, hold on. This. One word you missed. And okay, this. Students, do you people realize that you have done return is equal to NAV1 minus NAV0 plus D1 the whole upon NAV0 into 100. I agree. But do you people realize that this NAV1 that you are calculating is only 1 month NAV, just 1 month away from NAV0? So are you having the sense to understand that this formula will give you a return for a month? However, the 15 that they gave you is not written for a month, it is written for 12 months. Give me why if you understood this. Very good. You know how ICEI tackle? See, as a student, you can say, sir, what we will do is instead of 15, no, we will do 15 into 1 by 12. Give me yes. This is right answer, no problem. Give me yes. Did you understand the LHS what we are doing? Instead of 15, I'm taking not 15, but 15 divided by 12. Monthly I'm taking. This is one way of doing. You know how ICI does it? And that is how I would expect you also to do it. They do like this. Give me a yes if you understood. So, what is this? No, I'll tell you. See, NAV 1 minus NAV 0 plus D1, the whole upon NAV 0 into 100. Do you people agree that this is a return for 1 month? Give me a why. If NAV1 is month end NAV, then this return is a return for 1 month. So students, return for 12 months should be how much? Can I say cross multiply when you do? Can I say you land up looking like this? Give me a why. And that is exactly what is called as annualized. Annualized means, when they say no, annualized means we are calculating return for a month, but expressing it annualized. Expressing it annualized means I'm expressing it on a 12-month basis, like that. And on a 12-month basis, can I say the return has turned out to be 15%? Give me a why. Purujit, your video has become on, I think, by mistake. Just check. Yeah. Everyone, give me why. You understood now? Either you multiply by 1 by 12 here, or so when you're multiplying by 1 by 12 here, no, LHS also becomes 1 month, RHS also becomes 1 month. Everyone clear? However, when you decide to keep 15 only here, can I say LHS becomes yearly? So RHS also needs to be yearly. But RHS students, this is only for 1 month. So if this is for 1 month, then yearly how much? Cross multiply, basic. All clear? So if you all have understood this, students, I will now show you the solution. Okay. Students, first of all, look at the formula. What does M stand for? First of all, you are searching where is M. Students, what does M stand for? M stand for number of months, na baba, simple. Today it is 1 month, so we are doing 12 by 1. Tomorrow if it was 2 months, can I say would have done 12 by 2 and so on. Everyone clear? Okay. Just check the structure, please. Everybody. Is it comfortable? 15 is equal to NAV1 minus 65.78 plus 0.8, the whole upon 65.78 into 12 by 1 into 100. Again, students, is it 0.82 na? I think. Just confirm once. 0.82 in the D1 na? Just type that properly. And you should get an NAV of 65.78. Please, everybody, write this down. And please note that D1 is 0.82. Okay, D1 is 0.82. Everyone done? You all wrote that 0.82 now properly? Typing error. Okay. Piyush, you're asking on calculator, na? Piyush, you're able to hear me? You're asking on calculator how to solve like that? Okay. So take 15 on calci, which is LHS. Now, can you see on the RHS, in the denominators, there is 65.78 and 1. Can I say that when it goes to LHS, it will multiply by 15? So 15 into 65.78. 15 into 65.78. Done? And into 1, of course, no need to do. Now, can I say that into 12 and into 100? Can I say once it goes to that side, LHS, it will divide, no? So, divide by 12, divide by 100. You're taking everything on the LHS now. Divide by 12, divide by 100. And now only that much is left, no? NAV1 minus 65.78 plus 0.82, no? So, plus 0.82 becomes minus 0.82 there. And minus 65.78 goes there and becomes plus 65.78. Now check, are you getting it? Yeah. Piyush, can I start please? Okay, basic calculation done. Okay, everyone else now tell me, what have they asked you in point number 2? They are asking you some comment, no, in point number 2. Piyush, 100% you got it, no? Give me a why again. No? So in point number 2, they are asking you to provide a brief comment. When I first time read it, no, I was thinking so much as to what comment I should give, what can happen, this, that, etc. Then I thought, okay, why am I thinking so much about comment? Let's see what ICA has commented. When I saw ICA's comment, no, I felt like banging my head on the wall. This is the comment of ICA. Anyone understood this highly scientific, deeply intellectual, arithmetically brilliant comment? They are saying that there is no. So if you saw, I think some student also commented some time back that NAV 0 and NAV 1, can I say same? So they're saying, wow, there is no change in NAV. Okay, comment please, what to do? Once you're done, let me know. Okay, very good. So we now go to question number 3. Oh, very interesting question. Read it very carefully. I would recommend highly read only scheme A. Okay? Read only scheme A. Let me know once done. Q3 you should type and send me on the chat box. Very good. So I'll start. Anyone wants me to W? No one. Okay. So Mr. K has invested in 3 mutual fund schemes as per details given below. So let's talk only about scheme A. Students, I am going to in detail explain to you scheme A. You have to copy it down. B and C, you should try on your own in fair. Deal? Okay. So, what is Mr. A saying? I'm sorry, Mr. K saying? In scheme A, no? Note, when is he investing? 1/12/2018. Okay. Save the date. Okay. He has invested rupees 5 lakh. When the NAV was rupees 10.5. Can I say he invested when the NAV was 10.5? From this date to this date, can I say he got a dividend, a total dividend of 9,500? And at the end of this date, when this period, the year came to an end, the NAV was this. So now they are asking you, what is the effective yield on per annum basis in respect of each of the 3 schemes if you calculate it as on this date? Okay. Consider a year to be 365 days. Consider 1 year to be 365 days. I have a question. Do you first of all realize that if you are calculating the return of Mr. K as on this date, has 1 year of investment already completed or is just few months? Just check. Is it already completed 1 year? No. Few months. So students, can I say from this date? Now you have to check. Hello, everyone ready? Now, do you realize when you calculate effective yield, yield means students ROI, return, percentage. Return as a percentage is called as yield. What formula will you use? Can I say you will say NAV1 minus NAV0 plus D1 upon NAV0 into 100. Are you okay when I write 12/4 here? Give me a Y. Okay. However, ICAI is saying no, 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 no. Don't express it like this. Instead of that, you express it like this. Give me a yes. Very good. Are you understanding why I am saying so? Very clearly they have mentioned 1 year to be 365 days. Then we will have to calculate the number of days now. Students, let's calculate the number of days, please. So take your calculator. Take your calculator and tell me 31 days of, December, 31 days of December plus 31 days of January plus 28 days of February plus 31 days of March. 121. Very good. So everybody comfortable with 121 here? Now, students, I'm going to say something. Let's see if you're able to understand. Are we ready? I want to calculate yield, but I wish to do it on total basis rather than per unit basis. And then I will show you per unit basis also. Whichever one is comfortable to you, do it. I'll show you both. Everyone ready? So let's start. Okay. Scheme A. Okay. Students, you have the textbook. Huh? Keep the textbook in front of you. Everyone comfortable? Date of investment is 1/12/2018. Last date, can I say, is 31st of March 2019. Period of holding, as we all discussed, 31 plus 31 plus 28 plus 31. Can I say 121 days? Investment value 5 lakh. Hey, can I say this is like the NAV 0, but total basis. Everyone clear? NAV 0. Start value 5 lakhs. Now let's see if you're able to understand the next thing. Hold on, it went too fast. Okay. So when you invested 5 lakh in that particular mutual fund, can you tell me what was the NAV on that date? When you invested 5 lakh in the mutual fund, what was the NAV as on that date? In the textbook, please. 10.5. Can someone tell me why am I wanting to know the NAV on that date? What will I get? Sir, 5 lakh you invested, no? Can I say I will get number of units? Is everyone there with me? I will get number of units. Now, I have a question I want to ask all of you. You have to use your brains and answer. I am right now, doing it on total basis. Okay, I am right now doing it on total basis. Anyone, you have your notebooks with you? Just go to the start of this module and look at the formula there, please, of total basis. Have you reached the destination safely? In that formula, can I say investment value we already have? Come on, everybody. Everyone there with me? Investment value is rupees 5 lakh. Okay, search the question, how much will be dividend, and give me the number on chat box. 9,500. Very good. You should not divide this by units and convert it to per unit. We are doing total. So total dividend, do you people realize, is 9,500. Confirm, clear till here? Now, last point. Can I say we also need the value of the investment as on 31st of March 2019, correct? That 5 lakh has grown to how much? Now, if you look into your question, what information is given to you about that value? Only NAV is given, correct? They have given to you NAV per unit at 10.4. Do you all collectively understand that in order for me to crack that formula, I will need number of units? Give me a yes. Because the number of units I'll multiply by 10.4, only then I'll be able to know what is my value, total value of investment at the end. Can someone tell me from where will I get number of units? How will I find number of units? By mistake, my animation showed you some time back, but you can, if you have not seen, think. So do you people agree that when you invested 5 lakh, the NAV on that date was 10.5? Is everyone there with me? The NAV on that date was 10.5. Of course, the number of units you will get is 47,619.05. Give me a yes, you all understood this? Now remember, in shares, you cannot buy shares in points like this, decimals, part shares, no. But in mutual fund, students, you will get units in decimals also. Everyone understood, no? So don't round this off to 47,619. You keep the 2 decimals also. Practically real world, I'm telling you. NAV 2 decimals, number of units 2 decimals is there in the world outside. Everyone clear? In fact, this assumption was there in shares in theory also, if you remember intra-CA. Dividend decisions. I know theory you didn't like, but whatever. In that number of shares, if you remember, 2 decimals you used to take. Because when this theory of was built in America in the year 1958, at that time in American markets, part shares were also allowed. Now it is not, but at that time it was there. Anyways, students, what was the purpose of us to find this? The purpose of this was to do this. Take your time and let me know if you understood what I have done after 47,619 units. Is everyone clear? The purpose was to find the value of investment. Oh my God, my 5 lakh dropped to 4 lakh 95. Sir, some calculation mistake? No calculation mistake. The NAV has dropped, no, from 10.5 to 10.4. So of course your value of investment will drop. Till your story clear. ಎಲ್ಲರಿಗೂ ಪುರ್ಣಿದ ಅರ್ಥ ಆಯ್ತಾ सबको समझा okay if you all have understood till here then students last point is there. Tell me now what will you do? No, I'll just keep quiet. Tell me this entire expression, did you understand? And this is the answer. Okay, this is the answer. Hey, by the way, this 2.86%, is this return for 121 days or it is an expressed 365-day annualized return? Annualized. Very good. It is not for 121 days. Now you have multiplied by 361 by 121. Okay. All right. Students, you can start copying, please. Let me know once you want me to change the slide. You can just type D. Yes. Return is negative, like that. Negative return. Anyone wants me to W? Is everyone done? Okay. Don't go to scheme B, huh? Just 1 minute, please. Don't go to scheme B. If you are attentive, I told you I will also teach you how to solve this on a per unit basis. Then you choose which one you are comfortable with, and then you go ahead. All done? Anybody wants me to W? Okay. So drop your pens and listen to this now. Students, be with me. Can I start? Give me a Y. Are you ready, everyone? Okay. Give me Y on every click. Tell me this, did you understand? Asha, can someone tell me, is this, again, just check exactly what is the number 9500 divided by 47619.05. It is coming to, no, it cannot be more than 1. Na? It has to be 0 point something. Just check. It is not 4700. No, Sana, 47,619. 0.19. So correct. No, so I'm rounding it off to 0.2. Everyone clear with this? Okay. Students, now check the magic, please. And tell me if you understood what I have done. So can I say NAV 1 I already had. NAV 0 I already had in the question. Dividend, however, was given on total basis. So I converted that to per unit. And can I say I got the same answer? Everyone clear? See, if you ask me, I am okay with anything you are comfortable with. Generally, I do the total one, proper presentation. Okay. Anyways, that, like, for example, students, do you people realize that this number of units 47,619, can I say for that you have to do all that calculation? You have to show now how you got 47,619. You have to show now how you got 121 days, like that. So once everything is ready, then students to solve this, can I say it looks very small. But otherwise, can I say the effort you'll have to put anyways. Are we done? No problem. Would you be interested in this? Will you try this? Okay, go ahead. Student, scheme B I have kept in front of you. Just confirm, and if you have got it right, give me a Y. Should I wait for some time? I think I showed it too fast. Anybody wants me to wait on scheme B? Divya, take your time. We have got a lot of time. Don't worry. Anyone wants me to wait on scheme B? Piyush, take 10 lakh 10,000 on Kelsey. Are you ready? Minus 10 lakh. Keep giving Y. Huh? Done? Minus 10 lakh. Plus 15,000. The whole upon 10 lakh. Into 365. Divide by 90. Into 100. Got it? Chalo, students, you're going to scheme C now, everyone. Give me a Y. Are you going to scheme C? Okay, go ahead. Piyush, you got it now on Kelsey? Nidhi, that answer is positive or negative? Students, this is NAV on not 112, 1/3/2019. Okay, NAV on 1/3/2019. Yes. Students, are we done? Can we go to the next question, please? These are all ICAI exam questions. I hope you're comfortable. Okay. So, now one small thing I'll explain. Be with me. So today, let's take up one general knowledge point. Ready, everyone? And through that, I'll also explain to you something connected to academics of your CA final. Let me teach to you this point, okay? IDCW versus growth. Okay. So, students, you all are doing, your articleship might have started. I hope you are investing, saving money, and not putting all money in RCB matches or CSK or MI. Please save money. And as you are saving food, movies, so if you are saving money, students, one of the best ways of investing, can I say, is to invest in a mutual fund, okay? Now, when you're investing in mutual fund, let's say you go to a mutual fund website and you try to invest. As in the course of selecting different options, there will be one option which will ask you, okay, this or this. Is everyone there? Just 1 minute. Okay. Yeah, so what was I saying? IDCW or growth. Okay, interesting. IDCW, students, the full form is income distribution come capital withdrawal. General knowledge, no need to know this, okay? Just saying. Ready? Okay. From our syllabus point of view, I would like to call this, for time being, as the dividend plan. Be with me, don't panic, I'll explain. And this is the growth plan, okay? Clear cut, two options are given to you by the mutual fund when you're investing. Everyone clear? So they will ask you, you want IDCW or you want growth? Like that they will ask you. If you decide to choose IDCW, you know what that means? That means that whatever dividend plus realized capital gain the mutual fund will earn, that they will credit to your bank account as dividends. Give me a why. Did you understand this? Usual, very good. Any idea what therefore this plan must mean? Yes. Students, this plan means that the dividend or capital gain which is accrued, assimilated, accumulated, realized in your name will not be credited to your bank account. Instead, it will be reinvested and further into more shares. Your investment will grow. Everyone clear till here? If you have ever put money in FD, even FD asks you this option. Na? Do you want the interest payout or you want the cumulative? You're understanding, no? Cumulative means do you realize growth? Basically, whatever interest comes, it gets reinvested. See, the compounding benefit, can I say, you will get here only. Here there is no compounding benefit. Here they are giving it to you in your hand. Everyone clear? Like that, now mutual fund also comes out with two options, IDCW or growth plan. Everybody clear till here? Now, students, if I just compare this side by side, be with me. Let's say this is the dividend plan and this is the growth plan. Acha, by the way, people of your age should never take this plan. Always this. Everyone clear? This is for retirees. Why do you need cash now? You are working, no? You will be earning, you are earning articleship stipend now. And eventually you will be earning salary. So your liquidity needs are being taken care of by your hard work. But only when that time comes when you will no longer be able to work hard, can I say, then for liquidity needs you should go for this. Otherwise, always choose. Let it accumulate, let it accumulate, let it compound. That, can I say, can happen only here. Everyone understood, no? Okay. Moving forward, anytime you want to know any general knowledge about mutual fund for your particular self investment also, you can WhatsApp me. I'll give you my number, no? Feel free to ask me anything. I am okay with it. I'll give you advices because I've seen this industry since so many years. I myself invest in mutual funds, so I can tell you exactly what is right, what is wrong, better than most of the people you might know, because they might not be having that much understanding. No, that is why I'm saying. Okay, so now, so see, taking AFM here gives you added advantages free of cost. Okay. All right. So imagine, students, there are, let's say, 1 lakh units having NAV of 10. Okay, 1 lakh units, NAV of 10. And can I say rupees 10 lakh is the market value of assets? Everyone understood this? Now, the company earned a dividend of 2 lakhs. Company means mutual fund earned a dividend of rupees 2 lakh from various shares. Can I say this NAV will now go to 12? Are you all there with me? Because this will come as cash, no? Realized cash. Now, in the dividend plan, what does the mutual fund do? Can I say it removes this from its balance sheet and passes it on to you? Everyone there with me? It gives it to you. That 2 lakh will get credited in your books or in your bank account. Do you people agree that if that happens, these 12 students will drop to 10? Give me a yes. This 12 will drop to 10. Is everybody comfortable with this? From your investment accounts point of view, inter-CA, this is, can I say, come dividend NAV, This is, can I say, X dividend NAV? Give me a yes if you are able to connect what I'm trying to say. 2 rupees dividend, no? Sir, from where 2 rupees came? I hope you understand. 2 lakh dividend distributed amongst 1 lakh units, 2 rupees dividend. So 12 became 10. Everyone clear? Now students, growth plan. In growth plan, there are 1 lakh units at the rate 12. And okay, there was at the rate 10 first. Hold on. There were assets here in which there were shares worth rupees 10 lakh. This was what was there in the growth plan earlier. Can I say they got dividend of rupees 2 lakh? Your NAV, can I say, went from 10 to 12? Everyone comfortable till here? Now in the growth plan, students, the mutual fund says, okay, thank you very much. I remove the cash and I put it here. Everyone understood what I did? And can I say your NAV continues to be 12? And then as the shares increase, your NAV will increase. Simple. Everyone clear? Now, if you want to connect theory of inter CA with this, theory of inter, can I say says you will either have 1 unit of 12 with you, or you will have 1 unit of 10 with you plus dividend of 2 with you. Dividend decisions are irrelevant for shareholders' point of view. You remember this? Either you continue with the 12 rupee dividend, or, 12 rupee unit, or your unit drops to 10, but no problem. From side, can I say, you will get 2 rupees. Can I say wealth remains same? But student, that wealth remains same and all that is okay only on this date. Eventually, can I say this person's wealth will increase more, no? Are you all able to understand? Unless this person does something nice with this 2 rupees. If that person uses the 2 rupees to eat vada pav, then can I say, where will the compounding happen? Is everyone clear? No, compounding needs to happen. The 2 rupees has to go invest somewhere. Yes. So here, can I say, automatically investment, reinvestment happens, so nothing to worry there. Okay. All right. So students, everyone clear till here? Dividend plan, growth plan, all clear. If you want to know, I'll give you detailed notes on this. I have written lots of notes. I will give you all this. Okay. Now, there is one more plan which is allowed by SEBI, but not very many mutual funds use it. Okay. One more plan is there, but that plan, students, is heavily asked by ICAI. Okay, so you need to learn this. This is a plan called as dividend reinvestment plan. Everyone be with me, listen to this carefully. So first plan was called as dividend plan. IDCW, that is dividend plan. This is IDCW. Everyone clear? This is the growth plan. Like that, there is a plan called as dividend reinvestment plan. Be with me. So let's go through the whole thing again. There were 10 lakh units at the rate 10. The market value of assets, can I say, was 10 lakh. Then the company got dividend of rupees 2 lakh. Correct, no? Company got dividend of rupees 2 lakh. And your NAV went to 12. Now, listen carefully. Company says, dividend, dividend, dividend. No problem. This cash, students, I will give to you. Is everyone clear? I'll give it to you. So just imagine that this cash touched your bank account. The moment that happens, do you all agree that this number will drop to 10? Give me a yes. This number will drop to 10. Everyone clear? Now, the setting is like this. It will touch your bank account. Just listen to me carefully. And immediately disappear from bank account and go back to the company. Oh my God. Are you all paying attention? Now, sir, by that, what is happening? By that, the 2 lakh rupees that you got, can I say you are reinvesting it back in the fund. Give me a yes. Dividend reinvestment plan. Everyone there with me? Dividend reinvestment plan. Now, when you are reinvesting, do you remember that the NAV was 10? Come on, everyone. The NAV was 10 because at that time the NAV had gone from 12 to 10, no? Ex dividend it had gone. Can I say the LHS and RHS are not matching now? Are you all there? Can someone tell me what will change here after the 2 lakh comes back here? Come on, think. After the 2 lakh comes back here, can you tell me what will happen here? Some of you might think that, sir, the NAV will change to 12. Everyone give me a yes. You understood, na? Some of you might think NAV will change to 10. But no, not like that. What will happen is, when you are reinvesting cash, no, in the mutual fund, can I say you will get new units? Come on, everybody, give me a yes. You're understanding? You will get new units. The NAV of your existing units won't increase, but instead you will be getting new units. Now, how many new units you will get? Can I say 2 lakh you invested? I'll repeat everything, don't worry, but right now be with me. 2 lakh you invested. Can someone tell me at what rate did you invest? What should I write here? 10. Very good. Because when your cash had come to you, can I say the NAV had dropped to 10? Now at 10 you are reinvesting the money. Can I say you will be getting 20,000, right? 20,000 units. Is everyone clear with this? Acha, by the way, I think one error I wrote here. These are not 10 lakh units. Huh? These were 1 lakh units. Is everyone with me? 1 lakh units at the rate 10 was 10 lakh rupees. I just wrote 1 0 extra there by mistake. Hey, everyone following, no? Huh. So 2 lakh rupees you are reinvesting. Can I say at the rate 10? Okay, this 10 very clearly I am writing is the ex dividend NAV. Everyone there with me? 20,000 units more you will get. Can I say that the number of units you were holding, do you realize, grows from 1 lakh to 1 lakh 20,000? Tell me, is the LHS and RHS matching now? Everyone comfortable? Okay. Let's take new numbers and see if you're able to grasp this. Be with me. Let's say there were 50,000 units at the rate rupees 20. Okay, or I'll take some other number. At the rate rupees 30. Can I say there were assets here? Hold on. There were assets here, shares worth rupees 15 lakhs. Everyone comfortable? Now the company got dividend worth rupees, let's say 1 lakh. Okay, 1 lakh. Chalo, let's go through the whole thing again. Students, if you have to tell me, if this was, just 1 minute. Why is it like this? If this was a normal dividend plan, be with me, normal dividend plan. Can you tell me what will happen on the asset side? Normal dividend, not dividend reinvestment. Normal dividend, tell me what will happen. Asset side. Can I say cash will disappear? Very good. Cash will disappear. Hey, by the way, wait. One thing I forgot to tell you. Can I say when this cash came here, the total assets, can I say, must have become 16 lakh, no? Can you tell me what is the NAV here? Please give me that first. What is the NAV? 16 lakh divided by 50,000. 16 lakh divided by 50,000. Tell me NAV, please. 32. Hey, everyone understood now why 30 became 32? Because of this extra cash, everyone there? So I'll just place that 32 here. Now tell me, in dividend plan, what will happen? You are saying the cash will disappear. Very good. The cash disappears because the mutual fund distributes it to the unit holders. Can you tell me what will happen on the LHS? What will change? Yes, we're doing very good. Can I say the NAV will become X dividend? Very good. All done. This is normal dividend plan. Again 30. Yes. Let's talk about growth plan. Okay, this was your original balance sheet. In growth plan, think and tell me what will happen. Tell me. In growth plan, what will happen? For first of all, let's talk about assets. Samira, very good. Sana, very good, very good. Growth plan, do you people realize that this cash, yes, will disappear and it will go and stick into the shares? Everyone clear till here? And can I say LHS, there will be no change? Give me a yes. LHS, no change, life moves on. Normal growth plan. Correct? Very good. Next comes the tricky plan. You have to be careful. Dividend reinvestment plan. Last concept for the day, dividend reinvestment plan. Okay, in that step 1, tell me what will happen. Step 1, what will happen? Yes, 1 lakh goes to investor. Is everyone paying attention? So this cash goes out and this becomes 15 lakh. Everyone with me? Can you tell me what will happen step 2 in the LHS right now? LHS, what will happen in the LHS? Can I say NAV will drop to 30? Very good. Everyone there with me? NAV will drop to 30. Students, you are the investor, huh? Can I say you right now have 1 lakh rupees cash with you? What will happen? Can someone tell me next? Third step. Yeah, it will come back to the mutual fund. Everyone paying attention? It will come back to the mutual fund and the mutual fund gets the 1 lakh rupee cash again. And this becomes 16 lakhs. But when you give the money back to the mutual fund, what will the mutual fund give you? Can I say new units? Very good. The mutual fund will give you new units. Everybody paying attention? So the new units that you will be getting will be how many? Can I say the 1 lakh rupees you are reinvesting, no, will be divided by what price? 32 or 30? Of course 30. The rate is still 30 only. So 1 lakh divided by 30, 3,333.33 units you will get. Can I say your 50,000 units which you were holding earlier will become 53,333.33 units? Everyone clear? And I am pretty sure you should not be surprised if this into this is equal to this. Huh? Just check if you want. Next time don't check. Let me know if understood. Give me why. ये पक्का no? Kandipa. Okay. So pakka everyone got it? Okay. Now students, last point before you leave from here. What steps did I tell you? What steps did I tell you? I told you first cash will go to your bank. Look, keep looking at me. Cash will go to your bank. NAV becomes X dividend. Cash comes back to the bank. Cash goes back to the mutual fund. You get new units. Everyone remembers? Now last point. This activity, students, of 1 lakh rupees hitting your bank and 1 lakh rupees coming back to the mutual fund, can I say is a useless activity, financially speaking? So that activity won't happen. Is everybody paying attention? That activity won't happen. It's just that your number of units will increase. Okay, I'll do one thing. Wait. This was the original balance sheet, no, students? This cash will remain here only. The 16 lakh will remain 16 lakh only. However, since it's a dividend reinvestment plan, we will imagine in our head that temporary cash went out. This became 30. Everyone paying attention? And the cash came in, and this became 53,333.33. Give me a yes. Did you understand this? Some people call it like this: dividends received in kind. 333.33 units. Give me a yes if you understood this. Here, instead of getting 1 lakh rupee cash as dividend, can I say you are getting 3,333 units as dividend? Everyone clear with this? But students, I hope you know, once you get those units as dividend, the NAV will fall to X dividend. Everyone paying it. NAV cannot remain 32 rupees. That has to go down to 30. Otherwise, matching will not happen. No? Because here, the company is not, if you keep this as 32 only, then it appears as if company got another cash of 1 lakh from outside. I hope you're understanding. But like that, it has not happened. This only cash has got reinvested. So automatically the price will drop. If you have studied buyback of security, you know bonus issue, no? How does a bonus work? New shares are given to you, but the share price in market will fall, no? X bonus price will fall. Like that X dividend price is falling. Price will fall. Price will fall, students. Another mathematical logic is, number of units are increasing, but the assets remain same. So per unit price has to fall. Everyone understood this? Clear? Okay. So students, regarding this entire thing, no, I wrote a huge note. See, this much, this entire page I wrote. Okay. I would want to give this to you in writing tomorrow morning. Everyone clear? Tomorrow morning when 6:30 you come and you are all in that zombie mode, no? Before you come back to senses, this writing part will be over and we will start doing the sums. Everyone clear? So will you be there present 6:30 a.m. tomorrow? I will give you notes. Divya, you want it right now or it's okay if I give it to you tomorrow? Okay. So thank you so much, students, for active participation. I loved the lecture with you. You all were very, very active and very nice. I hope you people also liked the lecture today. And I will see you tomorrow. Okay. Thank you so much. Bye-bye. Take care. Thank you. Have a great day. Thank you.